Welcome back to another edition of Spin-Off Investing Simplified's YouTube channel, a channel where we spend our time looking at special situations. And I'm going to spend some time today talking about the recent foray I've had into the special situation of tender offers. I've been doing this for about, and tender offers and exchange offers, and I've been doing them for about 6 months. And I just want to share with you my results. I will note up front that a lot of these results are partly due to the rise in the markets over that time. So don't expect them, that this is not a typical season, I'm sure, and I can't use this as a litmus test to say, yeah, this is exactly what I should do all the time. But the interesting thing is they've been promising, and I think that it's worth note spending a little bit of time talking about how I'm approaching these. So check it out. Hey everyone, this is Greg Miller from Spin-Off Investing Simplified. I'm your host here at Spin-Off Investing Simplified's YouTube channel, and I appreciate you stopping by and taking a look around. If you appreciate this video or any of the others, please subscribe to our channel. We would love to have you along. We also appreciate your comments, and smashing that like button helps us out with the YouTube algorithm. We sure appreciate your time with us and hope you enjoy this video. Thanks a bunch. The updates that I'm going to be talking about today are on Atlas Technical Consulting, ATCX, AMC Networks or AMCX, Champion X, Prevail Therapeutics, and SFT. I do have some money in the Dow DuPont exchange offer for IFF shares, but I have not talked about it in this, or I'm not talking about it in this one because I just talked about that one recently. So let's jump in here and see what we've got. So first, I wanted to share just a little bit about how I think about risk when I'm doing these. My goal is preservation of capital with this, which means that it'll probably lower my overall returns, especially in these particular instances where I've got some of these companies the way that I've bought into them. And the more that I focus on preservation of capital, I am a believer that I will be able to limit if I can limit my downside risk, then I'll turn out all right on the upside. And so a lot of this stuff is focused on, can I make sure that I'm not going to lose my originally invested money? And then the overall return is then calculated out of how much is still risked in that particular investment. And so once I've identified that I've pulled out my original investment and I can use that for the next tender offer or the next position that I decide to take a part in, then that allows me to go ahead and basically make it so that I don't have that I don't have that expense anymore, and I can move on to other pastures. Monish Prabrai sometimes talks about this. He says, you know, the stock market allows you to create a free lottery ticket, and that's kind of what I've been trying to do with these. Is I get in, once I figure out I can get to a negative value on the specific company, then I can go ahead and have no cost or a low cost return on my original investment. With that in mind, let's talk about the specific ones and where I'm at with each of these. So number one, Atlas Technical Consultants. I put in my original investment and then pulled out most of it except for 200 shares. And so at current prices, or in and around current prices, that's about $10 per share. My current risked capital is about 450. And technically I could go ahead and sell one of those shares and still be in the black on this. I've looked at that a little bit, and I think it's worth me risking the $450 because I have a feeling that Atlas Technical Consultants is going to be worth much more than what it currently trades at. And so I'm I'm getting ready to hold on to it for maybe another 6 months or so, just to kind of see where it's going to be. Number 2, AMC Networks. So AMC Networks, I completely made a mess out of this one. I I got in at the tender offer price, or around the tender offer, at about 20. What was it? It was about 2250, 2350, somewhere in that area. And the sad thing is I sold calls and puts because it just jumped up afterwards, and I thought, oh yeah, I'll just go ahead and take it. But I had the calls and then bought the puts at the wrong price points, and not far enough away to really make it worth my while to sell out at that. And so I ended up buying back the call and selling the put, and that increased my costs on the transaction. Either way, it turned out that my total risk capital jumped up to about $33 a share, almost $34 a share. And so at the current value of about $42 a share, that has, I'm still doing well, but I could have done much better. And if I wasn't so dumb, I probably would have been at about 100% return on this, and I might be selling out today. Who knows? I'll probably get pretty close to selling out on this one in the next couple of weeks. Anyway, it looks like it's going to about the value that I expect it to be. I think the market value for this particular company, the total market value, should be somewhere about 1.7 million in the market cap, and I think it's 1.6 right now, so it's getting pretty close. The next one, ChampionX. So this was an exchange offer, and I cannot take any credit for this one. This was just me reading other people's thoughts, other people's ideas, and I jumped in at a pretty decent spot. I was able to use the exchange offer to flip this into no cost for myself. I did do a little bit of a risky thing. I didn't sell the ChampionX shares like I should have from the Ecolab exchange offer that this one was having. And had I done that, I could have had a complete risk-free rate on this. So technically, I got a little bit lucky on that. But I did sell out 86 of my shares. If you looked back in my videos, you can see that I had the original investment, and the shares left over were 186 shares. I sold out the 86 shares this last week, so that leaves me with 100 shares left. And at the current prices, about $17 a share, $17.60 a share, I basically have $1,700 for free, just waiting out there for me to go ahead and sell it. I may hold on to this until it gets up into the 20s or so, but ChampionX has done really well. I've been really fortunate with that. Again, I can't take credit on this one. This one was just me reading other people's thoughts and ideas, and I got lucky on it. And if you really think about it, $5,000 for getting lucky over a year, you know, with with the small sums that I'm using, I guess I feel pretty pleased about that. But again, it's not I just got lucky, and it was a good time to be in the oil, get into something in the oil area. And as long as they didn't go bankrupt, I was going to do pretty well with this one. At least that's how I thought it would be. The next one, Prevail Therapeutics. So Prevail Therapeutics, I'm in this one right now. There have been a lot of there have been a lot of law firms that have put out legal statements saying that they think that Prevail Therapeutics and their process to sell to Eli Lilly is under scrutiny right now. And so I got into it. I've got 500 shares, 11,530 in this one investment right now. That makes it so that I have quite a bit of risk. However, and the reason why I'm bringing this one up right now is you can buy a put at the $22.50 per share price range, which is basically buying a put for $5 to $10 per put. So that would, make it so that for my 500 shares, I could pay $25 to $50 and basically cut out a vast majority of my risk on this. So I'm really considering this. It would make it so that I could lower my risked investment. I think that's really important in this particular instance because Prevail Therapeutics makes up a significant amount of my portfolio right now, and I don't want to risk that total amount. And buying those puts for $50 and $50 for some peace of mind, I think is well worth it. And then it may lower my overall returns over the life of this particular tender offer, but it would make it so that I can, I don't have to worry about losing, $6,000, $5,000 on this, which I think that's definitely worth that on there. Who knows what will happen with this one if Eli Lilly comes back and they say, you know what, we're not going to buy Prevail Therapeutics. It's become too much of a headache. It could happen, we'll see. We'll see how that happens. And then finally, Shift Technologies. Again, this is kind of like the AMC Networks. I did not get a chance because I was working the day that it started dropping into my account. I did not get a chance to start to sell these at the prices that I would have liked to. So with the warrant offer exchange on this one, it could have been an opportunity to short sell SFT and then get lock in a good return. And I was unable to do a short sale on that one. And so basically, we're looking at, I'm up about $600 on this one. I think I'm going to hold this for a little bit longer just to kind of see how things pan out. It's very similar to the Atlas Technical Consultants business. It was part of, they're called SPACs, special acquisition companies. And in this particular instance, Shift looks like they might turn out to be a very, very good business to hold, and the price that they are at right now looks like relatively attractive compared to its peers. I think that one will be a good one to take a look at. If you want to do more reading, don't take my word for it. Go ahead and go to Seeking Alpha. You can look at the Shift. There's some recent write-ups that are pretty good on it. Yeah, and actually, even with that being said, you can look at the Atlas Technical Consultants as well, and both of those have some pretty decent write-ups that are definitely useful if you're interested in doing your own research and reading more about those two. That concludes my tender offer review of where I'm at with some of the positions that I currently have. I think that, again, going back to my initial statement, you need to understand that part of the reason why this has gone so well is because we went from a bear market to a bull market over the transition period for this. And so with the stock market rising as much as it has over the past several months, I have benefited extremely from that. Notably, the Champion X position has gone up significantly over that time. Had I known that that was the case, I would have probably held on to more shares of Champion X, but you can't beat yourself up for your losses or your missed opportunities. You have to pay attention to what you're doing, limit your risk, and then the return is going to take care of itself. So those are my thoughts. And if you have any comments about any of these, if you liked this video, if you have more questions about where I'm at with some of them, please go ahead and comment below. If you have not subscribed already, go ahead and do that. That makes it so that I continue to see the value in what I'm doing and whether or not it's actually worth it for you. And then smash the like button if you liked this video. Thanks a bunch, guys. We'll catch you next week, next Monday. As we finish up, we have one final note for you. This video was made for educational purposes only. Any companies mentioned in this presentation were discussed for educational purposes only. Discussing such companies and the specifics about them is for illustrative purposes only and not a solicitation to purchase them. We recommend that you conduct your own research and identify why you might want to own the company yourself before you commit any funds. We also recommend that you seek the services of a financial advisor that has considered your situation as your fiduciary. May your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks.